Okay, so today we are going to work on the final chapter from our book, and we're going to take a look at how we actually get the payroll from our payroll report into our financial statements. So journalizing payroll. Now, on our project, our computerized project, how did we get the results of the payroll report into the financial statements? Did you have to make a manual journal entry, or did it do it for you? Go ahead. Yeah, all you had to do is you went in and you went that like generate payroll journal entry, right? And then if you went and actually looked at the journal entry, which most of you probably didn't spend an inordinate amount of time doing, there was like 14 or 15 accounts that were impacted, right? Then what did you do after you did the regular payroll journal entry? What was the second entry that you generated? Yeah, employer payroll taxes, right? That's exactly what we're going to be doing here. We're going to do the exact same two journal entries, but we're going to learn how to do them manually, okay? Why? Because obviously if you're going to troubleshoot something, you need to know how it works. So the first thing I would like to take you through is just a very quick recap of balances of accounts we're going to be using, because if we're going to be going back and journalizing, we need a quick refresher on what's what. So, assets. Give me a couple example of assets. Anybody? Thank you. Cash, and AR, anything like that, right? What kind of balance do assets have? There's only two potential answers. Okay? It's a debit type account or it's a credit type account. Assets are debit type accounts, which means if I want to increase it, what do I have to do to it? These are not trick questions. If I want to increase a debit type account, I have to debit it, and if I want to decrease a debit type account, I have to credit it, right? Okay. So I think in what the accounts we're going to be using, I really think the only asset account that jumps out in my mind that we're going to be using for these journal entries are cash, or a special cash account maybe called payroll cash. Okay. All right, liabilities. What's a liability? Oh, I'm sorry, let's back up. What's an asset again? Something we own. What's a liability? Something we owe. And what kind of balance do liability accounts have? Credit, right? What's an example of some liability accounts? Accounts payable. Anything else? What about something to do with payroll? If you're going to pay a payroll later, what do you credit? Salaries payable, right? So really, anything, literally, with the word payable means what? Yeah, it's a liability. I owe it to somebody. How do you make a payable or a liability account go up in balance? You credit it. How do you make it go down? You debit it. Okay. So that's just accounting. And you've all been through accounting 1. Yes? So in payroll, we're going to be using salaries payable. We're also going to be using a lot of different tax accounts with the word payable after them, because when I take money out of your paycheck, I've got to pay it to someone, right? So I'm going to be using accounts like FICA payable and FIT payable, okay, et cetera, et cetera, et cetera. Every single one of these accounts are liabilities. They're recorded and tracked separately, one from the other, so that if you've got reconciliation issues, you can go in and figure out what's wrong. Okay. And it's imperative that every single one of them contains the word payable in the account title because that indicates it's a liability and you still have to pay it to the taxing authority. Yeah? Okay, so assets, liability, and then what? Going down the balance sheet. Assets equals liabilities plus, owner's equity, yes. Expenses are a piece of that. Okay. We're not going to be using any specific equity accounts. So then now we're jumping to the profit and loss. Okay, what's the first kind of account on a P&L? Cash is an asset account. That's on the balance sheet. Go ahead. Revenues and expenses. I don't think we're going to be using any revenue accounts, so I'm going to jump right down to expense. Expense has what type of balance? You were teasing me. Revenues have credit balances. Expenses have debit balances. How do you make an expense account go up? You debit it. There's not really, I mean there is, but for our purposes there's no reason you would make the account go down. Okay? And really, anything with the word expense in it is an expense, right? Utilities expense, wage expense, and then we'll also be using, utilities we're not going to be using for payroll, that was just an example. Wage expense, and we're also going to be using an account here payroll tax expense. Now, does that pertain to the payroll taxes I take out of your paycheck or the payroll taxes I pay out of my pocket? What do you think? This account is only used for employer taxes. Tell me again what the 4 employer taxes are again. It's from that table from the first week of class. That's it. OASDI, HI, FUTA, and SUTA. Right? Okay. So, that's your refresher. Debits have to equal credits. When you make a journal entry, always check that. There's no creativity here. You're going to make the same 2 journal entries every time you run payroll. Okay, so really, this is honestly should be review based upon what we just did with our computerized project. When we run a payroll, we input the data. Comes out in the form of a payroll register to review. You also just got done doing that big long manual payroll register, which is what we did in the old days when you ran a payroll, you wrote everything down, okay? The totals from the payroll register is what we journalize. Don't forget on your CPP, your continuing payroll problem, to total your columns and make sure they foot and cross foot. In other words, the totals from all the columns work across the bottom too, okay? Because those are the numbers you put into the journal. Then you don't see this in the computerized project, but there's a whole nother set of, it's a relational database, there's a whole nother set of compilation fields that bring all the data in per employee so that I can keep McKenna's wages accumulating all year, so when I get to the end of the year I can cut her a W-2. But you don't really see that, okay? And then we journalize it. We journalize, here's our 2 journal entries that we make every time we run payroll, and then I'll talk about the third in a second. So we journalize the gross wages and the withholdings, right? And it's not just necessarily taxes, it could also be a simple payable, right? Money I took out of your check that I'm going to remit to the pension administrator. Or, you know, union dues payable, right? Anything. Insurance premiums payable. Anything I hold out of your check, I've got to pay to somebody else. Secondly, I've got to journalize my payroll taxes that comes out of my pocket as the employer. And that also includes something we really haven't studied much about yet, but workers' comp. Okay, which isn't really a tax, it's an insurance premium. And then lastly, does anybody remember this word from Accounting 1? What's an accrual?
It's what's added up over time.
It is a time-related concept, not so much what's added up over time, but an accrual is something that we need to get the accounting entry into one period, but we're not going to pay the cash until later, right? Like if you earn 10 hours of vacation a month, say that, whatever that equates to be 120 hours, your 3 weeks of vacation a year, let's say. You wait, you take all that vacation in January when the company's really slow and you go to Jamaica, okay? Is it really fair to have to record all of that vacation expense in January for the company? No, because you accrued 10 hours a month. For a month, I need to accrue vacation expense for 10 hours of your wages. So that's an example of a period end accrual. Then when you take your vacation, it's been evenly split throughout the year where it was really being earned. And then when we're done with our general ledger or journal, we post it to the ledger and we prepare our financial statements. Okay, I'm not going to spend a ton of time here because we've done this. Payroll register, this is the big manual one you just did. You had gross wages across the top, then all your different withholdings, and then net pay, right? And that's all I got to say about that. This is what I'm talking about when you get done with your payroll register. Say this is your bottom row. And you've got, gross wages of $10,000 and FIT withholding of $1,500 and SIT withholding of $300, et cetera, et cetera. You've got it when you total up all those columns. At the end, you need to make sure that your net pay total's coming down and going across. That's called footing and cross-footing. And that just guarantees that your numbers are all correct. Okay, so don't forget to do that on your payroll register. You'll catch all your own errors before you hand it in to me. Obviously, in the computer, it does that. Then, and basically we transfer all that amount in a manual system into, and I mean, honestly, I'm dating myself, but back in the day after you got done doing the whole big continuing practice problem, you did one of those for every single payroll. Then you had a box or some sort of file with an employee, each had their own piece of paper, and then you took all that data and you transposed it one by one to employee earnings records. I mean, it kept a lot of people busy in the old days, I can tell you. Now you don't even know there's an employee earnings record, but it's there behind the scenes. That's where your W-2 comes from. Basically, what this is telling you is in words. I think it's a lot easier to just show you, so I'm going to kind of go through this pretty quickly. But essentially, your payroll expense is your gross payroll. That's what's most important. Okay, the cash that I pay you is a very different number from the gross payroll, right? The gross payroll is my expense. The amount that I cut you a check for is minus all your withholdings. Your union dues, your contribution to your pension, your taxes, your garnishment for child support, right? All that comes out. This is just saying, and in a small company, it's not a big deal. We did use it with, the heck's the name of our company that we're doing our big computer project on? Huh? Globe, right, okay. Oh yeah, it's a paint company. they have, at the end of each payroll register, when you look at the journal, the general journal entry, it's like salaries office, salaries research and development, salaries marketing, right? That's called a departmentalized income statement. And I'm not going to get too far into it, but it's a way to analyze your business by product lines or geographical areas or whatever. So all it's saying here is some companies might have, oops, I put a line through it instead of under it. Some companies might have a number of different expense accounts, which is just for compartmentalization purposes. And this is basically what I already said. Any deduction, doesn't matter what it's for, every single one of them has their own liability account. And you show me that you know that by just taking whatever the heck it is and planting the word payable on the end of the account. So don't be like, oh, I don't know what to call this. Union dues payable, savings bonds payable, insurance premiums payable. Okay? Wage garnishments payable, pension payable. Okay, garnishments. I thought that we talked about this, but have we talked about garnishments? No, okay. So what is a garnishment? Anybody ever heard of it, or? Sure, if you've ever had one. Yeah, that's exactly what it is. It's got it. It's a lien, L-I-E-N. A lien is another word for a garnishment, and it's something that's come through, it's been adjudicated at some level of the justice system, right? Could be county, could be city, could be state, could be feds, depends upon who's trying to lien your wages. So Carlos signs a note to me. For $10,000, I borrow money to start up his business. He doesn't pay me back. I take the note. I go down to the county courthouse. The note's notarized, and I said, this guy owes me money. He won't pay me back. And they order a lien on his wages. Okay, I'm an unsecured creditor. Most common kinds of garnishments are for taxes, child support, wage claims. Like my company shuts down and I didn't pay you guys your last week of wages. Medical bills, tons of medical bill garnishments. Verizon's a big garnisher. Cell phone bills. Cell phone bills are now, cell phone, smartphone, internet connections are now the third largest expense in most households in America. Isn't that shocking? I mean, huh? Housing and food. No, housing and transportation, which that's what was shocking to me, is that food has now fallen under communication costs. And it's I mean, it's your internet, your cable, your smartphone, your, you know, blah, 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 this whole thing. Holy moly. Anyways, so what happens is if I'm an employer, I get go to my mailbox or go on my online account, however it's set up. I don't think they do it online. I think it still is snail mail. And it says, Alec is behind on his child support and you need to start garnishing 22% of his wages. So this is probably not going to make him very happy. Do I have an option to do it or not do it? No, you have to do it. Then I take the 22% out of his wages, and there's a lot of different ways this can work, but in a very simple situation, then I just cut the check straight to the county commissioner, or not the county commissioner, the county court. Thank you. And then they will get it to the Office of Child Support Enforcement and get it to his kids, parents. So here, now this is when you're really in trouble, when you've got a number. Okay, the other thing is, this is also another word. All of these words mean the same thing. Garnishment, lien, attachment, those are all synonymous terms. None of them being good. So if you've got a number of liens, That's really a problem. That means you're going to work and really you're not gonna get a paycheck because everybody's trying to lean your wages. The first one is chapter 13 bankruptcy. That's what the asterisk is. There's different kinds of bankruptcy, 7, 11, 13. 13 bankruptcy is the first lien. The second is a federal tax levy. In other words, you owe the IRS money. That could be for anything. Estate taxes, income taxes, unemployment taxes, and or child support, whichever lien was filed first. And then this whole other category of, like the example I gave where Carlos owes me money, that's just an unsecured creditor. You're at the bottom of the list there. Student loans, blah, blah, blah. Okay. Then the question is, what percentage of my wages can get garnished? And it differs depending upon what type of garnishment it is. Okay. Student loans, a smaller rate of garnishment versus, for example, child support. And we'll take a look at the percentages in a second, and then we'll see if you have some feelings about the efficacy of these percentages. Okay, this is basically just saying this is pretty new. Where I guess I was describing before is a little bit old school, where you physically take the money, cut a check, send it to the county court, they send it to the Office of Child Support Enforcement. Now, do you remember the system that I told you about how child support now can transcend state lines? Have we talked about that? So in the old days, if you owed child support, this is probably, yeah, quite a while ago. Yeah, all you had to do, if I owed money to my ex-husband or ex-partner because he was raising my kids, all I had to do was cross over state lines, and they couldn't get a piece of my wages. And there were some really sort of just ethically horrific examples of, like, plastic surgeons in LA making a couple $1 million a year, and they had kids in poverty in Arizona. All they did was cross state lines. Now, according to the, trying to think of the name of the act, we called it welfare reform. It was the Personal Work and Opportunity Reconciliation Act that Bill Clinton passed in, whenever he was president, 92, 93, somewhere in there. That said, so what they did is they created, we have talked about this, they created a big national office of child support enforcement. So wherever you go to work, your employer's got to fill out a little document and send it to the respective state that's got your social security number and your name, and it all gets cross-checked. So if I owe money to my partner and kids here in Montana, and I move to Maine to get out from underneath paying it, and I go to work in Maine, it's going to still get cross-checked, and my wages are going to get garnished. And it's done electronically now. Okay, so the money's going to get zapped from my account, and it's going to go straight to my kids' parents in Montana, regardless of where I'm working. So what do you think about this? They're saying here that disposable earnings, in other words, that's what you bring home, they can take up to, depending on the state, 50 to 65% of your wages, depending upon how much you owe and how far, do you know what this means in arrears? Yeah, how far behind are you in arrears? Okay, I haven't paid my child support since 2012. So I'm in arrears a bunch. So I go to work in Maine, and I go to get my first paycheck, and I think I'm going to get $1,000, and I get $480 because they've taken 52% of it, which is in this realm. What do you think happens? I don't ever show up again. Forget it. I'm not going to work for less than half of what I thought I was getting. So I'm just going to go underground. I'm going to make less money. I'm not going to have a bank account. I'm not going to pay taxes. I'm not going to be part of the formal economy, right? So I think that's a problem. On one hand, if you're the mom or the dad sitting there waiting for money, you got a lot of problems because kids' parents aren't paying child support, heck yeah, you want 52% of their check. But if all you do is get one check and then they just go underground, what purpose has been served, right? So I think you've got to be careful about that. I mean, you as an employer, I don't mean be careful about it. When they tell you what you got to withhold, that's what you got to withhold. But I'm saying when you make policy around stuff like this, you got to be cognizant of what happens. What does this say? Take second priority. Oh, this is tax levies. So again, child support and tax levies are on the same level as far as priority of attachment. It depends upon which is filed first. Honestly, if you're getting to the point where you owe Chapter 13 money, you owe child support in arrears, you owe federal taxes, you know, nobody's probably feeling great that they're going to get all their money back out of those transactions. Basically, what this says is if you have a federal tax levy, and again, this gets a little bit into tax theory, so I'm not going to go too much into it, but they can take everything other than the total of your standard deduction and your personal exemptions. So if anybody's filled out their tax return this year, any idea what the standard deduction is for this year? $6,300, yeah, for if you're single. And how much is each exemption worth? It's like $4,050 this year, right? So one for me, one for each kid, right? So what it's saying is if I'm single, this is how much you're going to let me keep a year from my paycheck. Single, no kids. You never want to get behind with the IRS. Beg, borrow, or steal your money anywhere else. No, not steal. I didn't say that. Beg or borrow or get access credit anywhere else you can. You do not want to owe the IRS money. You want to beg, borrow, or do whatever in some other source. I do have a couple of clients, well, a number of clients. I mean, a ton over the years, but right now I've got 2 clients that are on something called installment notes, which means they've gotten behind in their taxes and now they owe, you know, I'm a plumber and I owe 25 grand because I haven't paid for 3 years. Well, it's not like one day I'm going to wake up with 25,000 to pay, so we go into installments, okay? But you miss one stinking installment payment, it goes immediately into default, and then you're going to have a federal tax levy, okay? It's not pretty. The other thing you can do that the IRS doesn't want to tell you about, you might have seen some of these really hokey ads like, I owed the IRS 100 grand and this great attorney got me down to 2,000. You can do something called an offer and compromise with the IRS. Again, you know, you wake up and it's like, holy moly, I owe 200 grand in taxes. I'm never going to be able to pay that off. The IRS would rather get something than nothing. So you offer them something. Like, I'm never going to pay you 200 grand, but I'll pay you 80. You know? And, you know, they don't put that out there in their brochure, but they would rather have something than nothing. And audits are expensive. So it's like, okay. So I've had a couple people do that. I struggle a little bit doing it for people because it's like folks that run up their credit cards and then they make a deal with the credit card company. You know, I had a guy do that this year. He was 20 grand in credit card debt, and he made a deal with the credit card company to bring it down to 1,700. So then he gets a 1099 for, it's called cancellation of debt income. In other words, that 18.3 that they wrote off. But it's like, I don't know. I mean, if everybody went out and ran up 20 grand in credit card debt and then offered him 1,700 bucks, it's like, I don't know, it doesn't really feel right. But anyways, it's not for me to judge. Okay. Pension retirement contribution. So this is just basically anything that you pay into for a pension. Like, what are some examples? Of what are kinds of instruments or kinds of plans? Yeah, so you could have a simple payable. What else? think these are the two that we've mostly talked about. There's also the 401k for a nonprofit you should be familiar with, which is a 403b. That's what we have here. It's just like a 401k, but it's for governmental or nonprofit or NGO. And basically it's saying here that you've got to be able to automatically enroll your employees in order to participate in a government sanctioned plan like a simple 401k, 403b, and get a tax write-off as an employer. You've got to comply with a lot of rules, and one of them is ease of signing up for the employees. This is just it's kind of funny that they still have this in the book. When's the last time somebody paid you in cash? Okay, I mean, that's generally, people do that, but it's under the table. Check, how many people still get checks at their job? Anybody? Still get actually a manual check? Sorry. Computer generated check, but then you've got to get it to the bank. Okay, so everybody else that works gets paid EFT, yeah, direct deposit. I would say that's, I'm making this number up, but most 80, 90%. If they do EFT, electronic fund transfer, or direct deposit, however you want to term it, you've got to have access to a pay stub. That's mandatory. It can be electronic, but then it's got to be encrypted, obviously. This is a big thing. I don't see really so much around here, but like I've got a nephew that works in construction in Austin, and he changes employers a lot, kind of on an as-needed basis, and they pay all their guys on pay cards and gals. Okay, so you get like a debit card with your paycheck on it, right? I mean, I can't imagine budgeting for your life with your, paycheck on it. So, yeah, and then it's used like a debit or a credit card, and it's used for, in his world, which is, sort of mobile or transient construction, people don't have bank accounts. So that's how they want to be paid. The problem is that it's sort of predatory, in my opinion, in that they get hit, oftentimes transaction fee when they use their card, and then if they need to transfer it to something like a check to pay a utility bill or something they can't use the card for, then you've got to go pay for a money order, and that's going to kick you another 4 or 5%. So it's folks that are generally on the lower income scale of things, and then they've got this additional hit to their income to get to their money. And then again, electronic pay stubs are okay as long as they're issued on a timely basis and you have access to them and all that good stuff. Final paycheck. When do you have to get your final paycheck? It depends upon what state you live in. In Montana, I believe that you can, I think this just changed, so I'm not going to say this, but I think that in Montana the rule is that you have to get paid the next time they run payroll. Does anybody know something different to that? Is that what it still is? Okay. So some states you've got to, when you let somebody go, like California, you've got to have their final paycheck right there, literally, here. Okay. Some states it's 24 hours, some states it's 7 days. In Montana, I believe it's still that you have until the next time that you run payroll. So if I let you go on April 2nd and I don't pay till the 1st of the month, I don't have to cut you your final paycheck till the 1st of May. Okay, so this is, have you guys heard this term, unclaimed wages or abandoned property? This is every state has got an abandoned property, I don't know, division or department out of their state government. And it's where everything goes that there's title to, but nobody claims. Like abandoned property, cars, homes, other kinds of real estate, paychecks. So I send you your final paycheck and it doesn't get cashed. It shows up as outstanding on my bank reconciliation. Bummer, bummer, bummer. Then, because I have to deal with that every month. I think it's after 6 months in Montana that I have to turn the check over to the state. as abandoned property. In other words, I can't just cancel the check. I've got to turn it over as abandoned property. And then it's up to the state to hold on to that, I think, for 7 years. And you can come back and get it or not. There's big, 7 years. Yeah, you see that number a lot with anything with wages or payroll records, 7 years. Yeah, essentially. There's big, it's kind of interesting, there's really big, a big brokerage world for unclaimed wages. I just had a gal 2 years ago, just a gal, kind of working stiff gal here in Missoula. She gets a call from an attorney in Oklahoma. Have I told you the story? This is a great story. And the attorney's like, your great grandpa had all these mineral royalties in Oklahoma, oil royalties. And she's like, yeah, right. Like, it's one of these scams. You just won 4 days in Orlando. She's getting ready to hang up. And it's like, no, that's what I do. I go and search, as the attorney for his living, he goes and searches abandoned property and then tries and matches heirs to the title. And so he does some, I mean, super interesting work, some genealogy combined with legal work. He finds her, he calls her, long story short, 150 grand was her share of the mineral royalties. So I did her taxes that year, and she was pretty excited. Okay, so this is the meat and potatoes of this chapter. 2 journal entries, basically what we just said, same two journal entries that your payroll project recorded, right? Number 1 records the wages, the withholdings, and the net pay. So that's the actual payroll itself. Number 2 is the employer's payroll tax expense, FUTA, SUTA, OASDI, and HI. These are always in the same format. It doesn't matter if you're cutting $1 million payroll or somebody's last payroll for 2 hours. You've still got 2 journal entries, okay? So let's take a look at them. Basically, you've got 1 debit and multiple credits. The debit is to wage expense for gross wages. The credit is to each payable account for each item. And then the balancing credit is cash for the amount of the net paycheck. Or if you're a company where it's got to go through a lot of reviews, the payroll report, then you credit salaries payable, and then maybe a week later you actually cut the checks. So let's try this one. So get out your notes, or your notebook, please, and let's set up a journal. Does everybody remember how to do that? What are our 4 column headings? Anybody remember? So we're making a journal entry. What are our column headings? Same as the ones we just did in our notes for our computerized project. Gotta have a date. Yeah, you gotta have the account title. Right? So, we got 2 journal entries. I'm going to show you the payroll. It's a little payroll. I've only got 2 employees. You're going to debit wage expense for the gross. You're going to credit each of the withholdings and call it just what it is. FIT payable, union dues payable. And then you're going to credit cash or so here's my 2 employees. This is employee A, and this is employee B, and this is the total. Okay. And I've got health insurance premiums that I withhold. Journalize the payroll, and then prove your numbers. many credits do you have? I think so. 6. 1 debit, 6 credits. You wouldn't. It's really important and for reconciliation purposes to keep your tax accounts separate. And we just saw that in the payroll practice problem too, or in the computerized project, right? There was an HI payable, an OASDI payable, and there's a reason for that. If you get off on your taxes, it's way easier to figure out where you went wrong if you've got them all in separate accounts. Okay. And I don't know why they do this. Every single one of these, I just want the word payable. And you could just write OASDI payable, HI payable.
Don't have to have a FICA.
No.
It's all the same.
Oh, make it easy, you know. I wouldn't have this. I would just call this OASDI payable. Okay, just keep it easy.
And the last one is just the
cash.
that you gotta
Yep,
pay.
yep. Your net paycheck is your credit to cash. Unless you're doing something like, oh, we're getting all this pre-approved and then we're running the payroll next week, what would your credit be to? No,
Payroll.
never expense.
Payroll.
Salary payable, wages payable, something payable, right? I'm gonna pay it next week, I owe it.
And then when you pay it, it's the expense.
No. This is the only time you have expense clause. It's right here.
Yeah, but then the next month when you do give them the money,
Then you debit payable credit cash. You don't hit expense again. The expense belongs to this period, right? Accrual accounting. Does anybody else need clarification on that? That's a very common issue with folks. So am I going to say that I did do this? Say that I said, I'm not going to run this payroll for a week. This is a huge company. Add 3 zeros to everything, and it's got to go through lots of layers of approval. When I go to pay this, say, $1.2 million payroll next week, what do I debit and what do I credit? Other way around. Debit payable to reduce the liability and credit cash. You're never going to touch expense again or you're going to be double recording it. Did you track what I said? Okay, so a week down the road, this is say a $1.292 million payroll. You would not be doing it in this little dinky company. What do? I just debit salaries payable and I credit cash. I'm not going to touch any of this stuff again.
That's the way it mostly works, isn't it? Because nowadays you get paid a week behind what you earn.
Yeah,
Nobody really gets paid on Friday for that week, hardly anymore.
No, not really. This is just a little tiny company. I'm saying, yeah, I sat down and wrote 2 paychecks. Yeah. Okay. Number 2, now I'm doing the payroll tax expense. That's my expense as the employer. Remind me what those 4 taxes are again? Somebody that didn't answer before? Yep. OASDI. What else? HI. FUTA and SUTA. Each one of those, again, is going to be credited for the amount that you owe. And the total of the 4 of them is going to go here. So I can't even do my debit till I've done my 4 credits, because the debit equals the 4 credits. Oops, sorry. So you've got 1 debit, and now if you people have capped for FUTA and or SUTA and or OASDI, you might only have just 1 credit, HI payable. But in a small payroll, small company, early in the year, you're going to have 4. So here's the situation. Here's the same 2 folks. And it looks like of their $1,845 of total gross, that some people are capping for FUTA or have capped, right? Looks like there's even a little bit of capping going on with SUTA. Nobody's capped for OASDI. So I went ahead and was nice enough here to multiply it out by the rates and give you the amount of the taxes. But I wouldn't need to do that. I would only need to give you 1%. Which one would I need to give you? SUTA. You know FUTA. You know HI, you know OASDI. Right? But I went ahead and did the multiplication for you. Journalize this. You've got 1 debit and 4 credits. Again, FUTA payable, SUTA payable, OASDI payable, and HI payable. This, don't screw around with this account title. It needs to say payroll tax expense. Where did these 4 accounts show up? Balance sheet or income statement? Balance sheet, they're liabilities. Where does payroll tax expense show up? P&L or income statement. Good. Now I'm done, right? On this one, when I make my journal entry, I write down all the accounts. I put in these 4 numbers, and again, normally you're going to need to calculate them, and then you add them up in debit. What happens next? So I've run the payroll. What's still an outstanding issue for me? Well, I've got to pay what? I've got to pay all my taxes. These are all sitting in a liability account, aren't they? When do I have to pay my 941 taxes?
If it's over 5.
You're getting all the rules kind of co-joined into one. 941, the IRS sends you a letter and tells you you're either what or what? Monthly or semi-weekly? I can say this 100 times and you guys will all look at me like, what? Monthly, if you get told, if you're adjudicated to be a monthly depositor, you have to deposit by what? 15th of the next month. If you're semi-weekly, that's that. I run the payroll Wednesday through Friday. I have till next Wednesday. I run payroll Saturday through Tuesday. I have to the next. I'm really studying machines. Friday. Okay. Remember my little mnemonic aid? Wednesday. Look, there's a pattern. WF, WF. And then if you don't pay Wednesday through Friday, you know it's got to be Saturday through Tuesday. So if you can put right in the WF, WF, then you can fill in the extra T. Got to always figure out a way to remember stuff that's not intuitive to remember. Okay, so 941. FICA fit. Then you post. Then you got to record your deposits. Record the deposit of my 941 taxes, please. Go ahead and record the payment of my 941 taxes and assume it's just this payroll. What accounts do I have to debit? Cole, what you got? I've got to debit my HI payable, OASTI payable, and FIT payable. The key is you've got to pick up both shares of the HI and the OASTI. Right? It's employee withholding plus the employer match. So you've got 3 debits. 2 of them you got to go 2 places for the number. Connor, did you have a chance to get your resume worked? So, are you going to have that by Thursday? You need to prioritize that, because I really want to keep moving on this. I mean, just because it's the best interest of everybody. Plus, I've got a meeting with the apprenticeship people on April 19th, and I really like the show. Forward. Cool. We did this in the project too, didn't we? You had to go into the general ledger and find out the amount per account. If all you're depositing is SUDA, it's easy. You just go pick up one number, right? This one's the complicated one. Okay. Let's break here, and I want to talk about what we are doing Thursday, and then Tuesday is the test. A week from today is the test. Okay, so for those of you that are listening, I'm going to sign off now.